Welcome to the Real Estate Way to Wealth and Freedom podcast with Jacob Ayers, providing actionable content to help you along your journey to financial freedom through real estate investing. As the premier asset class, real estate has helped ordinary people just like you amass fortunes. The benefits of passive income from real estate investing will allow you to live a life you want. And now your host, entrepreneur, real estate investor, and apartment deal syndicator, Jacob Ayers.
All right, today I welcome on the show, Edna Keep. Edna, thanks so much for joining us.
You're most welcome. I'm excited to be here.
Hey, we're excited to have you on. Well, Edna, could you tell the audience a little bit about yourself and how you got started in investing in real estate?
Sure. Jacob, my background's actually as a financial advisor. I was a financial advisor for about 15 years. And I didn't even really realize the blinders I had on till I started looking at real estate. But how it happened that we started looking at real estate is, the markets were down. It was early 2007, and there'd been a market correction that year. And I realized, all my income was tied to what I sold, which was mutual funds. And of course, life insurance, but mostly mutual funds. And I was kind of tired of that. So I thought, well, let's look at something else. We got some equity in our home. Maybe we can do something in real estate. So that's how we got started. That was the reason why we started looking. We just thought we would maybe buy a rental or two and see where it would go. We had no idea that 10 years later, we'd end up having almost 500 doors.
Yeah, awesome. Well, I think it's worth noting here, Edna, that you are a Canadian citizen and you invest in Canada. So could you talk a little bit about what that's like?
Well, when we first started, again, like there was a market correction in the U.S. actually, 07, 08. And so we looked at a lot of stuff in the U.S. thinking we'd like to invest there too. But it was hard to get financing, and our market at home was actually really good. And I kept worrying that we might be taxed too high as foreigners. That was another fear of mine.
Yeah.
We started to find some good deals right at home, like right close. Our first property we bought were 2 condos that were within like 8 blocks of where we lived. And even since then, we find a lot of great deals right here in our home province. We got a lot of the stuff that the whole world needs, like food, fertilizer, fuel, coal, diamonds, like we just have all the resources. And we get a lot of working people here. There's still room for more people to move. We've got a big province and not that big of a population, and lots of industry. And we just feel really comfortable investing close to home.
Yeah. So much. It's so easy to get started with your very first property kind of in your backyard, so you can be hands-on with it and see it and be very involved. And then later on, it's easy to expand outside your home market if that's what you decide. But yeah, really good points about your home market. It has a lot of the things that people need: job growth, economic growth, lots of resources, fuel, food, things like that. So yeah, it sounds like you were lucky in having those resources around and having a strong, stable market to get started in.
Yeah.
So rewinding to about the time you were doing your very first deal, Edna, take us through what your mindset was from that shift philosophically from investing in mutual funds and those things to kind of changing gears and focusing on real estate.
Well, what I learned, and this really opened my eyes a lot. I'm a big believer in keeping a person's health well, and I don't like taking prescriptions. And it used to seem, not so much anymore, but it used to seem like every time you go to a doctor, they would give you a prescription, right? And then they started learning that you shouldn't be giving antibiotics for every little thing that, you stub your toe, it hurts, so here's an antibiotic. And I used to make comments like, well, who educates the doctors, right? It's pharmacies, pharmaceutical companies. That's why drugs are the solution to everything. And I realized that, I was a mutual fund salesperson being trained by mutual fund companies. And I just listened. I didn't search outside. And when I started opening my eyes to other opportunities, you know what? I actually couldn't even sell mutual funds anymore. Within 2 years of our first rental property, I sold my practice, and now we're almost entirely invested in real estate.
Yeah, that's interesting. You kind of had this aha moment where you decided to start asking questions to yourself. Like you said, kind of opened your eyes to outside opportunities. So,
Yeah.
yeah, really cool.
And, we didn't understand real estate. We didn't understand. I had a fellow ask me yesterday, well, what did you tell clients when they used to come in and tell you that they thought about investing in real estate? I thought, well, why would you invest in an asset class that grows like about 3% a year? Like, that didn't make any sense to me. I wasn't thinking about leverage, wasn't thinking about mortgage pay down, and definitely wasn't thinking about other people paying off your debt.
Yeah, yeah. Well, there's the true power of real estate right there, right?
Yeah, huge. Yeah, when I learned that, like I said, I couldn't even sell real estate, or not real estate, mutual funds. So I went into real estate full time.
Yeah, awesome. Well, Edna, you got started with 2 condos in your home market and then have grown pretty quickly to nearing 500 doors currently. So tell us what that transition's looked like. What kind of properties are you buying? What are you looking for? Where? Give us the lowdown on what that transition has looked like.
Well, we started small like most people, and then we realized very quickly that if we wanted to continue, that there was things that we needed to do, and one was scale into multifamily. So when we moved into multifamily, of course, then we started thinking, well, we need more and more investors. So that was probably the biggest scaling opportunity for us, and primarily what we own to this day is multifamily apartment buildings. Although just recently we bought a land development project where we're going to be building some senior housing on it. So we forayed a bit, but our biggest thing is moving into multifamily with the help of other people's money.
Yeah, awesome. So you're kind of talking about syndication here through multifamily properties.
Yeah.
How long did that take you to make that transition from investing maybe in condos or whatever you did in between condos and multifamily to the syndication model?
Well, the first apartment building we bought was actually late 2008, and we took our first real estate investing class in June of 2007. And how that happened is I was in talking to a realtor one day, and he said to me, "Why don't you look at buying an apartment building?" And I said, "Oh, I can't buy an apartment building. I don't even have 10 houses yet, like we're
right."
And he said, no. He says, you got good net worth, you've got good incomes. He says, you definitely can qualify for an apartment building. I said, well, so tell me more. So he started talking. Before I left his office, I'd made an offer on a 24 unit. Actually, he said to me, well, do you want to drive by and look at it first? And I said, well, you told me they won't let me in until I've made the offer. And he said, well, do you want to at least drive by? And I said, I'll drive by you while you write the offer. I was time limited. So I drove by while he wrote the offer, came back. The only mistake we made on that is we did raise investor capital, which was good because the market at the time in our city was that a lot of the apartment buildings were converting into condos. And so we thought we'd do that. We were paying $75,000 a door, and they could sell for $125,000 a door. That's what we're told. So that's what we did. And now I look back, I wish we would have just kept that building because, we can't buy anything in our city anymore. Very, very little. That particular type of property, we'd be spending $120,000 a door. And we could still own it, but instead we sold them out at $125,000 a door, made a profit, but we would have held it today. So that's kind of was our first step. And after doing that with 2 apartment buildings, then we just decided to buy and hold. And that's been where our biggest incomes come from and our biggest net worth increase.
Yeah, awesome, Edna. So at this point, you had a small portfolio of rental property yourself, maybe in the neighborhood of 10 properties, and you took this course and decided you were going to syndicate apartment buildings. So how did you logistically do that your very first time in terms of raising money from investors, finding the deal, all of those things?
Well, the very first apartment building, because the one that we condo converted, we did syndicate the deal initially because it took us a while to sell all the units. And we just met with the lawyer, figured out how to do it, met with the accountant and the lender, and they set things up for us. So it was like we didn't have a clue. They helped us through every step. And we brought the investors in. At that time, I was still actually working as a financial advisor, so I could not raise money myself, but I partnered with somebody else. So one of the another couple who had taken classes the same we had, but just a couple years prior, we got to be good friends with them, and they were property managers and stuff, which was something that we didn't know much about. So I got the property under contract, phoned them up and said, hey, do you want to partner on this deal? The only thing, you'll have to raise the capital, because I still not allowed to do that. I had a few family and friends I could approach. So that was our first foray.
Yeah. Okay. So it really sounds like you were able to leverage the power of partnerships for this first deal, strategically had a general partner that you were involved with, and then really got the ball rolling that way.
Yeah. Yeah. Our biggest, our biggest start and why we were able to do things so quickly. We had 50 doors within 18 months of starting, was because we partnered with somebody who already had, I can't remember exactly, but it was between 20 and 40 doors already. So they took a lot of our fear away of making a mistake of, when they'd say, yeah, we own this kind of house. And I go, well, it's kind of ugly. And they go, yeah, but you don't have to live here,
Yeah, exactly.
Oh, yeah, that makes sense. And even today, I find myself having to say that same exact sentence to my students. Yeah, well, you're not going to be the one living here.
Yeah, right. Well, Edna, many people kind of starting out maybe in a point where you were in this time before you'd done your first syndication, kind of stray away from partnerships. They think of it like, maybe having to give up some of their equity or some of their piece of the pie, but you were able to turn that philosophy and really grow your portfolio. So what would you tell somebody that was in maybe a position like you were facing that dilemma?
I think it's a very important part of scaling. I actually tell my students all the time now, I would rather own 25% of 4 buildings than 100% of one. I have different strengths than most of my partners. My biggest strength is being able to bring the capital to the deal. I don't like dealing with tenants and toilets. I don't like even dealing with the financing. Actually, I like my partners to do that. I'm good at analyzing deals. I'm good at negotiating deals. My husband's even better. So what I like to see for anybody, and this is really in any walk of life, is work within your strengths and either hire out your weaknesses if you've got enough money to do so, or partner with people that have strengths in areas that you don't.
Yeah, absolutely. I think that's key right there, is finding a good partner, right? And finding a partner that complements your working style and your strengths, and vice versa as well, right? You want to complement your partner's weaknesses. So yeah, finding that good key partner is important in this whole big picture.
And one other thing I'd like to point out too, because our very first partnership like that went awry, and we ended up losing touch and not even friends anymore. And that part came down to, we didn't have a proper agreement written up. We were both so gung-ho and we were going hard. And every time the lawyer would try to sit us down to do this freaking 200-page document, it was read it. It was like, we used to make appointments with each other, say, well, let's at least read 3 pages today. And we do that once or twice, but we just never got it done. And in the long run, that was our downfall. So another thing too, like I tell people, like the best way to protect yourself is to get those agreements done up front, so that there's no guessing to who's responsible for what it's going to look like if things are great, what things are going to look like if they're not so great, and cover off all those details up front. And then your relationship can get through the tough times when there is.
Yeah. Well, Edna, from your experience, what are some good things and some bad things to look for in a potential partner?
Well, because we're the money partner and we don't do the bookkeeping, and I always tell my investors, I'm on the same side of the table as you are. We require reporting, quarterly reporting at the least. And to me, if you can keep your reporting and record and communication open, those are 2 of the biggest things. And if people start falling back on reporting, the huge red flags start coming up, and it just starts bringing up distrust. Like, what are you hiding? Why aren't you giving us what you're supposed to give? And so I've learned that, and I learned that back even when I was selling mutual funds. It's so important to report to your investors, good times or bad. And I see a lot of people, they get busy in their day-to-day, and they're growing and they're building and they're dealing with tenants and toilets and whatnot, and they forget that part. And that's a big mistake to forget.
Yeah. Okay. So for you, is it was finding a partner who was good with accounting and record keeping and bookkeeping, because that really played into your strengths and weaknesses. So
yes, because I'm not a bookkeeper type person. But
yeah.
and I didn't even expect them to do it themselves. We could always hire people. But it still was to get the reports. To me, it's as simple as looking at a bank account and saying, this is the income, this is the expenses broken down between power, energy, property management, repairs and maintenance, and this is the profit or loss, whatever it happens to be. Very simple. And a lot of people try to make it a lot harder than that. And it's got to be, this big financial statement your accountant gives you. No. Anybody can do it. It's just like balancing a bank account, but a lot of people have challenge with that too.
Sure. Well, Edna, when people are getting started out buying their first single family home or condo, kind of like you were doing in around the 2007 timeframe, it's easy to kind of work in isolation by yourself and not have much of a team. Maybe you have an accountant, a CPA, maybe you have a relationship with a broker or an agent, but you don't have all of these large networks like you do when you're syndicating apartment deals. So can you tell us how you've grown your team over the years and how they've been instrumental to your success?
Oh, that's such a good question, Jacob. It's so funny. I just finished a Facebook Live that I do every Friday for my students and followers. And that's what I talked about, was building that power team and those relationships and maintaining them. I think it's huge when it comes to success. So, we started out, first of all, by taking classes and being around like-minded people who were on the same path. That was big. We educated ourselves from people who had already done what we wanted to do, not just somebody who was, telling us, like university professor, they've never done it, but they can teach entrepreneurship, right? I wanted to learn from people who'd actually done what we did. So that's part of your power team, people that you work with that way, whether it's a coach or, even your lenders are mentoring you through certain parts of the process. Your lawyer, your realtor, your mortgage broker, and then right into your joint venture partners. So I think that part is so important. And we started by hanging out with the people that we met in our classes. And then we go to networking events. And even now, like I frequently put on networking events so that people can get out and meet each other. We host things for our investors every year so they can meet each other. And people like to be around like-minded people. So just start with one, and know that, the first realtor you ever have will probably not be the one that you'll end up with, 5 and 10 years later. We're still always expanding and growing our network. Although the apartment building we just closed on recently came to us through the very first realtor we ever worked with when we bought our first rental property.
Yeah, awesome. It just goes to show how you should maintain that network, even if you think that maybe that lead is a little bit cooled off, or maybe you're no longer on the same path as that old, professional or network or, associate from, way back when.
Yeah, absolutely. Absolutely.
So boiling it down, step one is to surround yourself with like-minded people and then begin to network in those people's networks. Find, maybe a broker or a CPA through these common like-minded people that you're associating with.
Yes. Mm-hmm.
Yeah, absolutely. Well, Edna, let's switch gears here a little bit for a second. And can you tell us a little bit about some of your worst and best deals?
Sure, absolutely. I'm going to start with our best one because I'm always I'm an eternal optimist.
Okay, yeah, I like it.
So our very best deal we ever did was 144 units in La Ronge, Saskatchewan, which is a small town of about 3,000 people. And it started out being a little bit challenging because most of my investors didn't want to invest in a small town. I did end up getting it syndicated. We ended up with like 12 investors in this deal. We needed to raise $1.2 million. But it took us a while because it was like, first of all, it was one of our first big deals. And it was different. So we took possession of that building in November of 2012. In July of 2015, 2.5 years later, we were able to refinance that property and pay all our investors out, take a payday by my partners and us, because I had a managing partner, of $400,000 each. And we still own that property to this day. And those investors, when they got their money back, all rolled over, except one who decided to, he thought he was getting too old to invest anymore, and bought 2 more buildings. And that building still cash flows us personally over $6,000 a month.
Wow. Well, that's really good. It sounds like a home run.
Yeah, it definitely was. And we've been searching for one ever since.
Yeah. Well, Edna, how about a not so great deal? Have you had any hard properties or any kind of difficulties? I'm sure you have. Would you share one of those with us?
You know what, I will. And it's actually happened to us not even too long ago. In 2015, we bought a 36 unit in the neighboring city from where we are, about 2.5 hours away, which we already have quite a few apartment buildings there because it's a strong university city. And it was in an up and coming neighborhood that we felt that we could kind of take a C-level building and move it to a B-level building. Nice looking building. It was fully occupied when we got it. We had built-in equity, according to the appraiser and the lender when we bought it, of over $300,000. So it all looked really, really good up front. So we take ownership. First of all, we find out that a lot of the tenants that were in there were not good tenants. So between a $20,000 pest control bill, a whole bunch of tenants that started not paying their rent, we just felt like that maybe the seller had just filled the building up with whoever could get his hands on. And then we had to clean up the mess. In our whole career, we never had a cash call. That building has now got us a second cash call for our investors. Our managing partner was so busy trying to deal with all the day-to-day crap with that building that he couldn't report to us, or that's what we're told. So the investors started getting suspicious, like, why aren't we getting our reports? Why aren't we getting our reports? So we started chasing them down for reports. As a matter of fact, started saying, we're not giving any more cash call until we get our reports. And then we start finding out things like, okay, we've got a caretaker in there that's costing us $50,000 a year. That was never in the original proposal when we bought that building. So that's our worst purchase to date. And we've got to the point where we were in a bit of a fight with our managing partners. And I mean, they're great people. I don't think they definitely never meant for a deal to turn out like this. And a lot of it was the market too. We went into a market, just before we bought, went into a market where there was a lot of overbuilt condos in our area. So they took a lot of renters into those where they initially thought they would sell them. And so then we've experienced higher vacancy there. So we're actually still fighting in our worst deal ever.
Unfortunately, things like that happen, and not all deals are rosy and turn out perfect. But what are some lessons you're learning and taking away from this deal, Edna?
You know what? Again, reporting is so crucial. And, we should have never gave the first cash call without having the reports up to date. It was kind of a panic situation. Well, oh my gosh, we got this happening, we need some cash. So everybody pulled together and put cash in. But it still wasn't run the way we needed it to be run. And now with the second cash call coming up, like I said, we've all rebelled and said, no, we're not until we have a full plan on what's going to be going forward. And we're not paying for a $50,000 caretaker either. So that's going to change. Reporting, if we would have had our reports on time and just absolutely forced that to happen, it would have never got as bad as it did.
Yeah. And is this reporting from the management company? Is that where the lapse is?
Yeah.
Yeah. Okay. And one other thing, you mentioned cash call. For the audience members who may not be familiar with that term, could you explain what that is?
Sure. So when you own any real estate property, whether it's a single family home or into multifamily, there might be several investors. Your single family home, it might just be you, but it basically means you have to put more money into the deal after you've already put your down payment, reserve, fund, closing costs. And that, like I said, in 10 years, it was the first time it had happened to us. And it was, we just never expected it to get to that point. So the biggest key there to know is it can happen. That's probably, one of the worst things that could happen is it's not just you buy the building, you put your money in, and the tenants pay the building off. And I mean, in all our properties except for that 36 unit, that how we sell it is what's been happening. That was the first one we'd ever had a cash call where people actually had to put money in to keep the deal running.
Yeah. Well, it sounds like you're getting a handle on it and the deal's not completely done yet. So you've got time to turn it around and maybe turn it into maybe the next best deal next time we speak.
Well, and sometimes that happens, things that turn out to be, and plus I always say some of the times, and I even have this lesson with my kids, the biggest struggles you go through are your best learning curves. Like there's so many things we learned up front, like based on this happening, that again, now there's stuff going into the joint venture agreement that maybe wasn't there before.
Yeah. Really good points. Well, Edna, you're growing your portfolio. You're buying a lot of apartment doors. You're up to near 500 now. What are your future goals?
Well, I'm training a lot of students to do the same thing and having a lot of success stories coming out of it. And I think I find that more fulfilling than even owning any more properties ourselves. My husband and I talk about that all the time. So my biggest goal is just coaching, training, mentoring, partnering with my students. And I always tell people, we're really training our success team because we want to have people we can invest in when we don't want to do this anymore. And that's what I want to do. I want to train, coach, mentor, help other people, become successful, help them with some of the learning curves we've been through so they don't have to go through it themselves, and just create a whole bunch of leaders and trainers in the real estate world that will then go on and share it with others.
Yeah, that's awesome. And it's really good that you bring up that fulfilling aspect because you've achieved whatever financial success you have to this point, and now it's starting to look at what fulfills you more than just the monetary gain. So yeah, really good stuff.
Mm-hmm.
Well, Edna, what are your reasons why? Why are you doing what you're doing? What keeps you going? What motivates you? What drives you?
You know what? That's a really good question too. I think we chose to invest in real estate initially because of the ability to build wealth in it. And we've done that. And we love that part of it. We love that we've got financial freedom. We love that we can, I was a single mom. I'm not sure if you're aware of that, but my first daughter, she had to buy her own car. She started working when she was 16. We had a lot of challenges that we don't even have to think about anymore. So that is huge for me, that financial and time freedom. We go to all our, kids' school programs and dancing and whatever else they're doing. We can take them on really nice vacations. We just came back from a week in Turks and Caicos. So that to me is the stuff that the reason why we started, and the reason that we've kind of got ourselves to the position where we just want to share that with people, because being in that financial freedom part is it. I mean, you don't have to worry about money anymore. You don't have to think about it. You don't have to, wonder, can I buy that new tire if I get a flat tire? And that's all stuff I used to have to worry about. Traveling, we still do just have our one place of residence. We have a cottage, but I don't like to own travel places. I like to visit and just kind of get spoiled, and I like to go to lots of different places. So, and then the other thing, like I said, it's really fulfilling to be able to share this dream with others and help people reach that financial and time freedom, and working with their own strengths. That's another thing that really, really drives me right now.
Yeah, so awesome, Edna. And it's so great that you get to do those things and have the freedom to do those things that you want. So really good stuff. Well, as we're wrapping up here, we've got a lightning round, just a series of 5 questions that we'd like to fire at you, and you just answer from the hip. How does that sound?
Sure.
Okay. Well, our first question is, what was your biggest hurdle getting started investing in real estate, and how did you overcome it?
I think with us, it was lack of knowledge. Like I said, we didn't have any idea about the whole tenants paying our mortgage down, mortgage pay down, equity appreciation, leverage. We didn't understand the whole concept of real estate investing and how that could work for our wealth building. And we overcame it by taking classes. We studied our first year in real estate. We were all over the place for classes. We started out with the Robert Kiyosaki group. And to this day, I'm always studying stuff to get better, to learn more, to move into different markets and stuff like that. So education, knowledge, and then getting over the fears. And that, like I mentioned before, getting over the fears helped by joint venturing with somebody who had already done it.
Yeah, sure. Well, Edna, do you have a personal habit that contributes to your success?
Yep. I get up and go to work every day. It happens, whether it's a challenging day or a celebratory day, or your kids are challenging you, or you didn't sleep good the night before. I just get up and go to work because I can, because I love what I do. And that's a big habit for success.
Yeah, awesome. Well, do you have an online resource you find valuable?
There's so many I don't even know. Like podcasts like yours, Jacob, are a huge resource for people when they're, and not even just when they're starting out, but to keep your mindset focused, to learn about the different strategies that people are doing, to connect with people, like one of my students who I think's been on your podcast, Tyler, and listen to, how motivating he can be for a 21-year-old to say, hey, I own 74 doors after 2 years. My net worth's increased by 800,000. Like, that has got to inspire a lot of people. So podcasts are actually one of my favorite ways right now. Anytime I'm doing stuff, whether it's working out or cleaning my office or anything like that, I've always got one on.
Yes. I couldn't agree more. I'm a little bit biased towards podcasting for obvious reasons, but yeah, it's such a great resource. It's free, on demand. So yeah, such great stuff.
Yeah.
Well, Edna, what book would you recommend to the listeners and why?
Well, one of my favorite books was by Robert Kiyosaki, and it's called Why A Students Work for C Students and B Students Work for the Government. And the reason I like it is because I was always that C student, and I see that happening in my life now. So I couldn't sit in class and be the A student. It just was never important to me. I was like, whatever, get that over with. I just want to learn what I want to learn. I don't want to learn that other stuff. And I'm a chronic learner. I'm learning all the time, but only stuff that interests me. And I realized that that's actually a trait in a lot of successful people, is they struggle in school. And then because they, never felt like they really fit in, because they weren't the, sharpest knife in the drawer, it's caused them to work harder on themselves to get themselves to a point where they end up being the C student that employs the A student. Because a lot of people peak in high school, which is kind of sad to say. And I can say that was
me. Yeah. Well, Edna, if you were to give advice to your 20-year-old self to get started investing in real estate, what would that be?
Don't try to go it alone. Get a mentor and get a team, and make sure that your mentor is somebody who's done it already, not somebody who's just teaching. Like I said, I kind of have a challenge with university professors who are teaching entrepreneurship and have never done it. So yeah, that to me has got to be the biggest one. I've had a coach in my corner all the time, different ones, but all the time since 1999. And that's been my biggest growth is, I get to learn from their mistakes and their shortcuts. And I've learned a lot that way.
Yeah, such great advice. And it brings up a good point and something you touched on earlier, and that is having a mentor.
Mhm.
You actually have a lot of experience mentoring students of all ages and experience levels, getting started investing in real estate, growing their portfolio, achieving financial freedom. So could you talk a little bit about that?
Sure. And it's funny when you mention the age, but I have students in my group that started with me when they were 19. And I also have a lady in my mastermind group that's in her 70s. So you're so right when you say all ages, because anybody can start anywhere. I never bought my first rental property till I was 48 years old. And 10 years later, we have, 473, we just bought 12. What's that? 485 doors right now, and working on 42 units, which is why I said roughly 500. That's under contract. We haven't got it finalized. And that's so important.
Well, Edna, you have a ton of great resources online. You have an astounding YouTube channel with just a ton of great information. You have a website. Could you tell the audience members a little bit about where they can find you?
Sure, absolutely. So my website is just ednakeep.com. And as a gift to our listeners, I wanted to give away a free video series that I did, which just kind of shows people how they can get started, what we did to get started, because of course we can only come from where we are, right? And that one is found at just training.ednakeep.com. All my channels are under Edna Keep, so very easy to find.
Yeah, well, thank you for that, Edna. So
Welcome.
Our audience members who are looking for that free video series can go to training.ednakeep.com and find those there.
Mm-hmm. Yep.
Well, Edna, thank you so much for coming on the show. Tons of great information, lots of inspiring stories, ups and downs, all kinds of good stuff. So thank you so much, and we look forward to having you on again in the future.
You're most welcome, Jake. It was my pleasure to speak to you today and your audience.
Yes, of course. Thank you, Edna.
Okay.
You've been listening to the Real Estate Way to Wealth and Freedom podcast, providing you actionable content to build your real estate empire. Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for personal advice. The opinions of guests are their own. Information is not guaranteed. All investment strategies have a potential for profit or loss. The host is operating on behalf of the Real Estate Way to Wealth and Freedom, LLC, exclusively.